So welcome everyone to this new Q&A webinar for the 30th June 2020. So hope you are doing well and staying safe at home. It's getting better across the globe, but still the danger of the infamous COVID-19. Okay, so you know how this webinar works. I'm gonna go over series of assets, stocks, forex, and all that, and you will be able to request me to analyze or ask me any questions about anything. Okay, any asset, any time frame, any rule, or any potential trade that you are seeing or willing to take. Okay. So if you have any suggestion, just please type in your suggestion in the chat box and I will happily look at it during the webinar. I'm just trying to find my pencil. I can find it, one sec. Okay, it's over here. Okay, great. So without further ado, okay, let's start. So I've got a list of assets here on the right side, so we can go over them, okay? But I would like, first of all, I would like to ask you if you have any requests. So I can go over the requests before the ones that I have selected over here. Any requests? Or on this list, you want me to go over anything before the Euro NOK and the Kiwi dollar? Omar, he's got a request. Well, I'm going to read it. I'm going to start. You have sent me an email. Well, I just can't read emails right now. I'm just in the middle of the webinar, Omar, so you have to tell me over here. Just cannot do two things at the same time. I can, but not reading an email and then speaking to you and moving the mouse and all that's just too much. Okay, so we are going to start with this one, okay? Well, you just paste it here. So when there is no set and forget, we'll wait for confirmation. SACT, which is creating a new imbalance, anti-time frame nested with high time frame confluence. Imbalance, correct. Do we trade the imbalance immediately once validated, or we wait for the retracement pullback and we enter the trade? Well, I mean, we have to wait. I mean, if you are asking me that question, is because you haven't read the rules, the lessons, or you haven't understood what it is explained in the rules. Before, I mean, we've got the imbalance, like here on the Euro NOK, and you have to wait for the imbalance for price to retrace. You've got a new imbalance on the daily, you have to wait for that imbalance to be created and then wait for the retracement. What you're saying is price rallies and then you take the trade. No, I mean, you have to wait. An imbalance is not confirmed until it has happened. So you don't have any imbalance here until price has rallied and consolidated away. Clear? Okay, great. So we're gonna start with the Euro NOK because we've got this scenario is happening on many NOK cross pairs. Okay, so it is the same thing. We're gonna see. We're gonna have a look at a few of them to see that that you should be taking only the ones that are looking the best. Okay, so here we've got the 3 months in an uptrend, the 6 months in an uptrend, the 12 months in an uptrend, the month is in an uptrend, everything in an uptrend. This bearish pink candle is a little bit scary, isn't it? But then you have two choices. You can go set and forget on the level on the weekly here, 2 ERCs, very wide ERC candles. As per the rules, once the rally happens, it consolidates away with this dark cloud cover and it takes a few months for price to retrace all the way down. I remember one of the members that was asked in the community, he was saying that we had a downtrend or something like that, and I said, well, no. And a downtrend requires two peaks, two swing highs. This is the low, the first swing here, and then a lower low than the first low here. So we've got one peak, two peaks, and then a lower low. But also it requires an area of demand to be eliminated. So having two impulses alone, like this one over here, having two impulses alone is not enough. We need to accomplish something. Prices need to eliminate anything, need to break anything, something. Just having two bearish impulses means nothing. Make sense? I know that this is probably basic for some of you, but there are other new members and all that, so going over this is important, okay? So, once the June 2020 month, okay, closes and the second quarter, we're going to have a 3 months area of demand because this candle will be the consolidation away for that area. So we're going to have a 3 months area of demand as well for longs in the 3 months sequence, okay? So here, what is the anti-time frame for the 3 month sequence? Anyone? We've got 3 month sequence is made of 3 time frames: 3 months, the monthly, and correct Anwar, the weekly. So Anwar or anyone, do you see the possibility of a brand new area of demand being created on the weekly? Frederick and Anwar, anyone? And if so, when would it happen? What do we need on the weekly in order to have a weekly demand area? Okay, I believe you can draw, okay, on the charts. You have to have a tool that will allow you to draw. So, so eliminate supply zone or trend line break. That's correct. So do we have the possibility of drawing a bearish trend line on the weekly? Here. Do we have the possibility? Yes, we do have. Do we have any area of supply to be eliminated? Anyone? So we need a trend line break. We need something like a trend line broken, okay? Or we need an area of supply eliminated. Do we have any area of supply on this chart on the weekly? No, we don't have. Frederick and Anwar said that. We don't have supply. So it is impossible to create an area of demand by breaking supply because there is no supply here. Probably on the daily 4 hour, 1 hour, 1 minute, there will be lots of areas of supply. But on the weekly, the only area of demand we have is here, and supply, there's nothing here because this is all-time high scenario. There's nothing on the left side of the chart. If I zoom out, you're going to see nothing. So the trend line would connect the upper peak there, and then this is another peak. But some people will draw the trend line like this, okay? But that would have been valid if we had had price action like there, or even before, one candle before, okay? But as you already know, the rules are very clear about this. We do not cut through candles. So, and this is cutting through the candles. We just cannot allow that to happen. So we need to adjust the trend line, move it until, okay, this is the way we draw it. Okay, it may seem illogical, but there is a logic behind it. Okay, so what we need now in order to have an area of demand, we already have the basis. Okay, and this is good for a base because we've got a bullish engulfing pattern and another one. So this could be the proximal line, isn't it? There's no leg out. In order to have an imbalance, we need the leg down. Okay, leg down, the drop, we have it. Then we need the base. That could be a basing structure. This is not a basing structure down there, but here it is. Or a bullish engulfing pattern, a piercing pattern, a harami, and all those kind of patterns. Then we need the leg out and consolidation away. And that hasn't happened yet. So maybe in the next couple of weeks, we're going to have this. Ideally, if we have that's great. Okay? That will confirm after this candle consolidates away, that will confirm the imbalance, and then we will have to wait for the retracement on the weekly to trade the weekly sequences and all that. but it could continue to rally because at the interchange zone we would have a daily CP or a valley demand area, blah blah blah, and then we could continue to rally or to trade long all the way up to the top. Make sense? And that's what you need to be doing on every single time frame. Make sense? So it is in the making. Demand is in the making on this particular time frame. But if we look at the lower time frames, we're going to use this one. I'm going to switch to the daily time frame. So this is the trend line for the weekly. It's not good right now. So that was the weekly area of demand. We're going to leave it. So do we have any area of demand over there on the daily? Yes, we do. So that's the area of demand. Where we've got here, we go left. This is a CP. We can't use it, another CP. But here we've got a peak, and then we've got another peak there. Okay, we could continue to go higher, another peak. This is a CP. So we connect the latest two, this one and this one, and then we get a wall. Okay, so this is what we have. Trend line broken. The trend line is broken. Why? Because the rules say that in order to have a trend line break, we need at least one full candle consolidating away the high, the low, the open, and the close. One at least. And this one had like 12 candles. And it created an area of demand right at the bottom. Make sense? So you have several options here. Based on the weekly sequence, you can go long on the entire weekly imbalance. Okay, so we have several options. You can do this. I'm going to use the whiteboard. So first option, go long on the entire weekly demand. Which is the second option? You can tell me options, okay? Full the entire area of demand. The second one is wait for what? Wait for a wow. Wow on the daily. But we've got the weekly area of demand in control. What is the entry time frame for the weekly sequence? The 4 hours. So another option that we have here is a 4-hour wow or 4-hour area of demand. Okay, the wow requires a trend line break. The demand could be responsible for eliminating area of supply, daily wow or daily demand zone. It is not the same thing, but okay. So that's the daily demand zone. What other options do we have in order to go long? We could take the entire weekly area of demand or then part of it, okay? Maybe half the weekly area of demand, or maybe a third if you don't have the capital, okay? The amount of a third of the weekly area of demand. You don't need to drill it down in the smaller time frames. So the options here would be, okay, I have got the option. I take the full area of demand, 10, 15, a little bit of padding at the top, and then 25% wiggle room underneath. That would be my entry. Then you would have to calculate based on your account's equity. If you got like 10,000, you would have to calculate how much could you risk. 1%, how much is it? 1% is $100. So can you risk $100 over there, or you would have to risk $200 or $300? You do not. And Omar, have you read the rules, Omar? Okay, so I'm going to explain it. Okay, you can take the full area of demand, the full imbalance, or you can divide it. Okay, half of it. Your entry would be like around 10, 14. I'm going to zoom out. Okay, your entry could be like using half of the level. If the level is, let's say, 10, you take 5. Make sense, Omar? Half of it. Then you can take a third of it. We divide this in 3. Okay, one, the upper part, the middle part, and the lower part. But what you have, what you can't do, okay, is taking the first third at the top, at the proximal line. You have to always protect your entry with the stop loss underneath the zone that you are using. Make sense? It does not mean, okay, I'm going to divide the weekly area of demand in 3 slices and I'm going to take the upper one. No, because price could do like that, kick you out of the trade and then rally without you. Make sense? So when I am talking about using 1/3, half of it, 1/4, any portion, any fraction, I'm talking about using always, okay, I'm going to use 1/3, okay, the 1/3 at the bottom, the middle, okay, something like that until you, or if you decide to take the whole level. So the other option would be waiting for a daily area of demand. And do we have an area of demand on the daily? Okay. Yeah, wow, because we wait for a deeper penetration. Just one question, because can you read the answers and the questions that the other members are asking in the chat room? Yes, okay, good. Perfect. So, and now how would you score this level? High, low? What is the basing structure? Is it good? Yeah. What about, don't we need 1 year, 2 years candles? We have one over there. So what can you tell me about that? This is good departure or bad departure? Daniel said it, yeah. We need 2 for high probability, but like Daniel said, if you can read him like 4 comments ago, larger than average. So if you take a look at the ERC candles, this is an ERC candle, another one, another one, another one, all these 2. Is this candlestick larger at least twice the average ERC candle on the chart on this time frame, on this particular time frame and asset? It is. So one single candlestick is enough. This candlestick is like dividing, imagine that you divide this candle in 2. So you've got 1 ERC and 2 ERCs, don't you? That's what a big, large ERC, single ERC means, okay? So it is good, so we can go long there. But price did not pull back. It might pull back, okay? It might, but not yet. So we have another option here for our area of demand. So do we have a 4-hour area of demand as a reaction to that weekly area of demand? Because remember that on the monthly sequence, we are waiting for a daily area of demand, and we already have it down there. On the weekly sequence, we are waiting for a 4-hour area of demand. It is enough. A 4-hour imbalance is enough to take a trade based on the weekly sequence. Okay, so let's take a look at the 4-hour, okay, and see if we had an area of demand on the 4-hour. So there is. Look at that. We've got, if we go back in time, this is a weekly area of demand down there, okay? So we've got here, this is not a peak, blah, blah, blah. This is a peak, and this is another peak, okay? So we get the trend line break, and that's the area of demand. Let me try to draw it. That's the area of demand. Make sense? So the trend line goes something, that's something like that. We don't cut through candles. Okay, but it's broken. Make sense? So this area of demand, it is nested, Omar, within the weekly area of demand. So I'm going to use the crosshair. Okay, look at the crosshair. Where is that area of demand on the 4-hour? Look at this. Within the weekly area of demand. It is also within the monthly area of demand. So we've got several confluences. We've got the monthly area of demand in control. We've got the weekly area of demand in control. We've got also a weekly bullish engulfing pattern confluence. If we go to the daily, we've got also a daily bullish engulfing pattern at the bottom. and then we go to the 4-hour, and we get that 4-hour every demand. I know that some of you, maybe Daniel, I think you took that one, a few others took the 4-hour every demand, I think Lion 89 as well. Look at the strength of the reaction to that level. Yeah, Daniel said he did take that one. So that's how, I mean, what I did just now, okay, what I just did right now is the strategy, nothing else. That's it. That's all we have in a trending market. This will get as complex as you want as soon as you start adding consolidation and counter trend trading. You know what I mean? This is the full strategy. There is nothing else. You've got 3 time frames: monthly, weekly, and the 4-hour and the daily. You have decided to trade the monthly sequence. Okay, so the monthly sequence says, okay, we've got the monthly, the top time frame of the sequence, which is the monthly, dictates the trend and the bias and the direction of your trades. So the monthly is in an uptrend, isn't it? So we can only go long, okay, only buy according to the monthly sequence. So anything on the way down is not allowed. It's prohibited because the top time frame of the sequence dictates the bias. The trend is bullish, we only go long. So far, so good. I mean, this looks like basics. It is basic, but that's the strategy. There is nothing else. Okay? That's the basics. So we've got the realignment rules. So we've got the monthly, the weekly, and the daily. So as price starts to rally, as you can see there, starts to rally, okay, the weekly gets that super strong area of demand made of 2 ERC candles, which is really, really large. So we've got the rule that says that when we have 2 ERCs, the interchange zone usually has 1 time frame lower, okay, minus, or let's say minus 1 time frame smaller, CP or imbalance, okay, let's say a CP, usually a CP. So usually we have a CP, but that bullish or that upper wick, okay, that upper wick is telling us that on the daily we should have a drop rally instead of a CP, and that's what we've got there. You see, a drop rally. That's exactly what we see there. Make sense? Mohani, we need 2 ERCs, but 1 is enough, as explained in the daily. 1 is enough if it is much larger than the average ERC on the time frame. And if you look at the 4-hour, that ERC candle over there is way larger than any ERC candle on the left. That's why we can use it. Okay, so where was I? Okay, the daily over there. So as price starts to rally, it gets over here, rally base, rally base, rally base, overextended. So on the daily, the overextension on the daily and the super strong move is telling us that, okay, great, we have the monthly, weekly, daily sequence. I just can't go long on the daily. Okay, overextension, no good. Hello, Kushbo, welcome. Make sense? So the daily is out of the way. I mean, it's out of the equation. You just cannot use it to take a long trade. Make sense so far? So what about the weekly? Because the weekly is up there. So if the daily is out of alignment, what do rules say about the next potential area to buy? Yeah, you can go to trend and war, but I'm just talking about trend trading. Okay, 1 time frame higher, correct, Said and Damien. So if the daily is out of alignment, we can go long where? At weekly imbalances. So we go to the weekly okay, no daily or the weekly, where is the imbalance? Down there. And that's where you can go long. Those are the rules, as simple as that. If the weekly area of demand had been eliminated, then we can go long on the monthly. But it happens that this weekly area of demand is also nested at a monthly area of demand. So both the monthly and the weekly time frames, and both the monthly and the weekly sequences allow us to go long. Only long. On the way down, you can go short, but that's counter trend. But the funny thing about counter trend is that this is great. I mean, when you see prices dropping like that, and over there, okay, I could have taken, imagine there were areas of supply on the 4-hour. Let's switch to 4-hour. On the way down, imagine there were areas of supply in the 4-hour. I'm not going to do the chain analysis, get too much price action, sorry. So you can go short and all that, but that's easier said than done. Why? Because it is hindsight. You already know the price is down there, and then you go back in time, okay, and you say, okay, I should have taken a 4-hour area that was there, and the daily average supply that was there, and that's easier said than done. So in hindsight, anyone can have great trades, 10 to 1, 10%, 5%. That's very easy because in hindsight, anyone can be successful at anything because you know the outcome. So you can sort of play with your mind and with anybody listening to you and say, hey, this is how great this strategy is. But as you already know, if you are new to the community, if you are not, you know what we're doing here. This area of demand there, how long was posted? How long was it posted in the community? I've been talking about this area of demand for weeks and weeks, okay, for months really. So when it comes, when prices drop to that imbalance, and you don't take the weekly imbalance. Okay, I don't have enough capital. Okay, you don't take the daily area of demand nested over there. Okay, great. You don't now. Okay, you missed both those trades, and then you've got a third opportunity, which is the 4-hour area of demand that we pointed out before, and you don't take it either. So what can we do about it? Okay, Daniel and others took the trade, but if you don't trust the rules, if you don't have enough experience with the strategy, that's okay. But if you do have the experience, then that's what we call missing the trade. Fear of success, auto-sabotage, because we know that this is a great area and we've got a lot of confluences for longs, and now we have the added confluence of a weekly bullish engulfing pattern. So you don't take the trade. I can't do anything about it. It was pointed in the community months ago. Okay? And make sense? All good with this? So, and that's the strategy. 3 time frames in a clear trend. So when prices start doing something like this, EuroCAD, okay, I'm going to clean this a little bit. So this is the EuroCAD, okay, and this price action right there is the middle of the range. Okay, diddle in the middle, 50% range. Okay, so we've got that, but look at the weekly time frame. Can you please tell me where you would buy and where you would sell? I mean, buy, where would you buy? Is it clear? But where? I believe you can draw, okay? I have enabled the drawing. You can draw with some pen or highlighter that you have on your Zoom toolbox. At the extremes, exactly. So we've got, I mean, can anyone, I mean, you don't have to do the scoring of all the variables like Bayesian structure, departure, profit margin, and all that. You know all of them. Okay, how would you score? If you had a score from 1 to 10, how would you score this level? 10 maximum. Okay, so this is a great imbalance to try, but it's taking a long time. Okay, and taking a long, I mean, price taking that much, is it good or is it bad for taking a long down there? Good or bad? And if it is bad or good, tell me why. Do you think that this kind of price action is good or bad to plan a trade down there? Pushball is saying that it is bad. Bad, why? And if you say good, why good, Frederick? Damien, why good, why bad? Because you could be saying something, I mean, it could be correct, but you could be, okay, one sec, source of imbalance. Yes, it is a source, but long time to reach it. So, how long did that imbalance take to be formed? 1, 2, 3 candles. Okay, let's say 4 because he printed a high over there. 4 candles. Okay. Forget about this is a weekly chart. Okay. So, yeah, but no clear direction, supply and control. We are ranging. Yeah, correct. So we are ranging. But if you wanted to try to go long, copy, where would you go long? So it took 4 candles to rally. For the rally, it took 4 candles. How long is it taking to retrace? Let me tell you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 15. For now, 15. So which one wins? Which one is stronger? 15 to drop. Obviously, the 4. So that is a great level to go long. And this price action is just telling us engulfing pattern. Now this is a real mess, but because we have a bearish engulfing pattern and then we have 2 consecutive bullish engulfing patterns. Okay, so price will probably do that. That's what we are expecting. Okay, will that happen? Will price drop again to the 50% confluence and then rally again? I don't know. Nobody knows. Okay, but what I do know is that this is a great imbalance. This one scores high, and this one also scores high. So when price is up there after a strong rally in price, going long on the way down, as it reacts to that weekly air supply, is suicidal. So you just have to wait on this one. Wait, patiently wait. Will it take 2 more months? Okay, no, great, no problem. If you are using the daily sequence or intraday, then probably you're gonna have short opportunities on the way down. But if you are trading intraday and you are trading also the weekly sequence or the monthly sequence, make sure that you have separated accounts, one for the intraday, one for the weekly sequence, and another one for the monthly sequence. So if you trade intraday, use the account for intraday, and then if there is a 4-hour area of demand, use the weekly sequence, and if there is a daily area of supply or demand, use the monthly sequence account. Independent accounts for each sequence. Otherwise, if you are doing great in your long-term sequences or swing trading using 4-hour and daily imbalances, and you start adding smaller time frames because you want to play a move on the way down, then if you start getting losses here, it will affect the effectivity and the results on the statistical outcome of the other accounts. Make sense? Waiting is difficult when chasing a trade. Correct, Anwar. And that's why most traders fail, because they are not patient enough. We are used to seeing the last iPhone on TV, hey, or the newspaper. Oh, the new iPhone was just released. I'm gonna buy it. 1,500 euros. No problem. I'm gonna buy it. Come on. Who's gonna pay 1,500 euros for a phone? Come on. Crazy. Well, that's how the world works. You've got the money, you pay it, you want it now. But now you have to wait, you don't wait. Because you want instant gratification. And instant gratification is to me, is the biggest sickness of the 21st, 20th century. I mean, wants things now, right now. And that doesn't work. Okay, so let me read your comments. Gopi, Alfonso, how would you rate the interchange on the weekly chart, fresh 2 ERC candles? Over there. This one. Gopi? That one over there. You're not replying, so I don't know if you are referring. I guess you are referring to that. But you are planning to go long over there, maybe, because that's not allowed. We are waiting for the origin of the move. That would have been great when price was rallying, a retracement over there, and then going long. But now, in the middle of a correction, going long down there is not allowed. If price drops down below these lows, it's almost sure that price is going to retrace all the way down to the origin of the move. Okay, Kushbo, does the type of movement slow or sudden drop on the way down decide the success of the trade? Well, the time of arrival, yes, it influences the probabilities for this one. So if it takes 3-4 candles to rally and then just one to drop, how would you rate the arrival into the zone, Kushbo? 4 candles to rally, 1 to drop. Scary. Stay away from it. Because the bearish impulse would be stronger than the bullish. So no matter how strong this level is, it will probably not hold. Maybe it will, maybe it won't, but if the arrival is way faster than the rally, than the the leg out, forget about it. That's what I do. That's what the rules say. Okay, you want a fast arrival, but not a faster arrival than the original impulse. Okay, and that one is good right now. Okay, so Peter, what if price plummets from where it is now down to the weekly area in just one candle? Still good arrival? Yes, it is. Because we already have, we said like 14, I don't remember the number of candles. We have a lot of trading here. So it doesn't really matter if it happens to one candle over there, because we already have a lot over here. Okay? So that's what we have over here. And what do we have, right? If we take a look at the monthly, what do we have? We've got a monthly demand zone as well. Make sense? And now we've got another confluence over there. And we've got a 6-month engulfing pattern as well. So we've got lots of things down there. It's the origin of the move. So down there, it will be great. Is it clear? Do these explanations make sense to you? So even though we have had areas of demand right in the middle of the range and they have played out, okay? But we shouldn't be doing that unless you are doing intraday and all that. They've been playing out. This one area has been tested like 3-4 times, and we're expecting price to drop way farther. So let's see what happens. But not the kind of trading that I want on my account, that's for sure. Okay, good. Okay, good. So let me add this one, the EuroCAD, to the list over there. So you want me to go over any asset? Can be stocks or Forex, anything. It doesn't really matter because the rules apply to all markets. Omar, how long demand supply zones are still valid? Do banks wait months to fill their orders from the original imbalance? Can answer that. They hold as long as they have to hold. Will they wait? Well, they've got the algorithms, got all kind of robots doing their work, and they've got also traders and all that. So how long are they waiting? I don't know. I just know that these imbalances are created by not created by you or me or 10,000 like us. They are created by big guys. How long will they wait? I don't really care. I don't really care. I just know that it is a great imbalance. It goes with the trend. It's got nested imbalances. The score high, and that's all I need to know. I don't need to pay attention to any interest rates, to the FOMC, anything. Just great imbalance. I take the long, and that's it. Okay, because when these rules were developed, and they didn't take into consideration anything like that. So why should I take that into consideration right now? Okay, so somebody said, okay, we've got CAS. Let's see, CAS. Somebody's this one from the UK. So let's take a look at CAS. And then we're going to take a look at which one? Fresnillo. Well, that's a Spanish word. Fresno is the type of tree. So Fresnillo, that's another one. And the other one, Glencore. I'm just accepting this one. The suggestions from this member. Okay, you could be doing the same, but I'm not receiving any requests, so I am accepting his suggestions straight away. And Kushbo said Nifty PSU Bank. I guess this one, Kushbo. Okay, that one as well. Oh, that one's good for longs. Okay, good. And another one from Tom, Workshore Group. Oh my God. Oh my God. This one, I don't think I had this one. Crazy stuff. We're going to start with this one because this one is going to be very easy. So anyone, what should we do now on this one? Weekly and then the daily. So this is Tom's suggestion, okay? So this is all-time high, everything is bullish. What should we do now? Where can we go long? Tell me exactly where, time frame and price area. Yeah, we have to wait for a bigger pullback. But where? Where would you imagine this scenario? You've got $1 million to invest and you can risk 1% on this one, $10,000. Where would you risk $10,000? Where exactly? Yeah, demand zone, but where? Damien is saying between 2 and 4. I guess he's referring to this one. Okay? Exactly. Well, I have to agree with him. So if I were to risk my money, so imagine you I mean, I don't know how much money you are trading. I don't care. I'm not going to ask you. But imagine you've got $10,000. Okay? So you can risk 1% on every single trade. So $1,000, $10,000, that would be like $100 risk for every trade. Okay, so on this one, you wouldn't be able to risk because you would have to risk like, well, $300, 353 would be the cost of buying 100 shares. So you can buy half of it, then yes, okay? So, but if you were to buy down there, why? Because the rules say that after a super strong bullish impulse, we have to wait for what? For the origin of the move. As simple as that. Origin of the move. This imbalance of the daily, could it work? Yes, but this is not the origin of the move. And if you pay attention to the charts, and there are hundreds, if not thousands of the scenarios, when you see large candlestick bodies like that, almost always price goes to the origin of the move. Could this hold for a few days or maybe some weeks? Of course. But like I said to you, put yourself in the shoes of someone who has $1 million. That's what I do. You've got $1 million. Million. So you can risk 1% on every single trade. That would mean 10K. So would you risk $10,000 over there? I would not risk $10,000 there. But down there, definitely, I would definitely risk $10,000 there if I had that money. If I had $100,000, I would risk $1,000 over there. So how many shares of stock am I gonna buy? You can do the calculation. Okay, or you can buy options, whatever. But down there, not in the middle. This would be like, I don't know, here, see, this is the average. So it would be like 1, 2, 3, 4, 5, 6, like 7, 8 ERCs. This is not normal. So after 3 origin of the move, you have to wait for the origin of the move. We've got 7, more or less, 7 average ERC candles. Come on, origin of the move. As simple as that. But then you haven't had any trades in the last week. Okay, price is over there. I'm gonna buy there. You lose. Then why did I take that? We were covering that in the webinar. We have to wait for the origin of the move. But then your ego kicks in. Hey, I didn't have any trade. Hey, buy there. It is great. Great imbalance. A gap and fill gap over there. Interchange zone. Great. Go long. You lose. Okay. So let me read you. What ID daily is nested? What if daily is nested in monthly demand? Then great. It's even better. We've got a weekly every month over there, so you could drill the entry down to that area over there. But on the daily, I wouldn't use the daily to go long. Why? Because look where price action is a little bit poor on the daily. But that doesn't mean that it is not good to trade. But the lower the time frame you use on the stocks, the more trickier it gets, because since the stock market is not a 24 hours continuous market, that will be the pre-market and the gaps and all that. But once you merge that price action into bigger time frame candlesticks, those gaps won't be seen and you will see better price action. So this one down there, it's great to go long. Okay, great, Omar. Glad to help. Carlos WK comes from the watch list of Robinhood traders. So are you a Robinhood? Are you using Robinhood, Carlos? Okay. Okay, good. So that is Workhorse Group, and this company is about what? Auto parts. Okay, great. So let's take a look at this one. Okay, CAS. This is it's related metal minerals, maybe gold related. I don't know. Is this a gold miner? Maybe. Gopi. I'm not sure. But well, it doesn't really matter. So what about this one? What would you do in this one? I will wait for some of your answers in the chat box. What would you do in this one? Would you be planning to go short, long, and if so, where? Shorts, Tom, where and why? Why shorts? Copper company, okay? Long, shorts. I can see quite a few things on this chart by just looking at the bigger time frames. Monthly down. Yeah, monthly down, but what about this? How do you score that, Tom? Is that a good quality price action? Bad. So Kushbo said no. So shorts. Why shorts? Even confirmation. I mean, it's a bad zone. I mean, I'm not waiting for. I mean, look at the price action. Let me zoom in. Let me maximize this. So when you look at the monthly chart, now compare the last 6 months, Kushbo and on the others. What do you think is stronger, the bears or the bulls? The bears and bulls. So as you can see, the bulls win. Okay. So why do the bulls win? Why? One ERC, 2 ERCs. 1 ERC, okay? No ERC. So we've got 2 consecutive ERCs versus 1. Which one wins again? Kushbo? Anyone? Bulls. That doesn't mean that you can go long, okay? We have to put all this into context. So if we take a look at the 6 months chart, what is going on the 6 month chart? Demand and control. Well, no, don't think so. Okay, we've got the trend line. Well, tricky. Trend lines like this. No, pick. This is a pick, yeah, as well. But it doesn't really matter because this was demand, supply, sorry, and this was also supply. It was eliminated by what? This super strong impulse, made of how many candles? 1, 2, 3. 1, 2, 3, origin of the move. Okay? And it failed short of retracing. Look at the pink candle trying to pull liquidity from down there. This is like the magic hat of a magician. So there's a lot of money. There are rabbits and everything over there. In this case, gold, copper, whatever. And they were trying to steal the copper from down there. Okay, magician, Copperfield. So David Copperfield's hat. So look at the reaction. So going short over here with this, not a good idea. That's a 6 months, okay? So what about this one over there? Look, all-time lows, okay? Bullishing of the pattern, the origin of the move, proximal line, and rallying, no shorts. Let's take a look at the 3 months. We already did. No, we didn't. So 3 months every minus down there, it fell short. Why? Because it hit the proximal line on the 12 months. Okay, so look at the 3 months over there. Let me do this. Object tree and Gaussian patterns. Last bearish impulse, not able to consolidate away like it did up there. It didn't. And we've got a bigger picture, 6 months, 3 months, 12 months, pushing price higher. Okay, this is balance. Let me read you. Do we have to include higher time frame in our analysis? You don't, but if you do include it, you are going to see, you're going to see lots of other opportunities, and it was going to prevent you from having unnecessary losses. Now, I'm currently trading, I've got 3 accounts right now, and I'm trading long-term accounts, and then a shorter-term account using the weekly, monthly sequences, and then I'm using another one to trade, this will be in the future, course on options, to trade spreads, to test some ideas that I have. And on the long-term trades, I'm holding trades for ages. Like this one on American Airlines, okay? I'm holding this one, okay? I took this long based on this and all that, okay? And I took this trade like around there, and then it rallied. I could have made quite a lot of money, but then I protected my entries, and now I've got until January 2021. This trade cannot be a loss, okay? It cannot be a loss. So because I protected it after the rally, I got the profits out, back it in, and then waiting. So I've got until January 2021 for price to rally over there. I've got like half a year for price to rally. If now the COVID-19 start to get better, and then the airlines start flying again and all that, then price is going to rally again based on this. It doesn't really matter. COVID doesn't really matter, but well, it will help. Okay, and then it might take a few months for price to rally, but that's my long-term account. Okay, on a shorter-term account, I could be trying to go long there. Why? Super strong area of demand on a weekly area of demand. So that's another trade, okay, which is trying to play out right now. So this is the valid area right now. Origin of the move, weekly area of demand, 1 year C, much wider than the average, and we've got all these confluences. So, Anwar, when you look at the bigger picture, then you're going to see potential trades based on that bigger picture. Otherwise, you're going to have to wait for price to retrace all the way up there where shorts will be possible on the monthly sequence. Okay, trend line, strong, 2 year Cs, nested weekly area supply. So this is a counter trend long, okay, but, well, that's explained in the rules. The reasons why, I already explained. So, Anwar, okay, Omar, is there EMA confluence of price didn't touch the zone? There is no EMA confluence. Where? In the previous chart? Because I just switched to this one, so sorry, I'm lost. So on CAS, you see? You mean this one? Yeah, but there cannot be any EMA confluence, because the confluences, even though it is not shown here, you are talking about bullish confluences, aren't you, Omar? But you just cannot have bullish confluences of the 20 EMA because it's bearish. So it's useless. Confluences for longs on the 20 EMA, it's impossible because the 20 EMA will be like this. On the weekly will be like twisted, trying to rally again. On the 20 EMA, on the daily will be something like this. On this one, it will be like flat. Okay? So we can't use the EMA confluences are only used in a trending market. In a bearish consolidation, bullish consolidation, it is not used. Okay? Make sense? Any other question about this one? Is there any reason stopping price to hit the zone? No idea. Nobody can know because there are thousands of traders trading. What we do know is where the zones are. We've got a weekly area demand over there. We've got a weekly area of supply over there. Tested, bigger penetration expecting, and we are expecting that to happen on a weekly area demand. You have to anticipate what is going to happen based on the bigger time frames, price action, no consolidation away, tested areas of supply, and bad price action on the monthly. When you unite and you put all this together, and this is not easy, then you've got your bias. Make sense? Anyone? Kushbo and all that? All the others? Omar is there? Okay, but we don't consider this as a value trade unless it touches. Okay, great. So right now, counter trend longs on this one. It would have been great if we had prices drop to the monthly average demand. And it might drop, but it looks like it's going to take. If it does, it's going to take quite a few weeks because eliminating all this price action, unless we get the COVID-20, it's a little bit difficult for price to drop with 3 years in the weekly. Okay, so maybe in September 2020 we're going to have a new version, COVID-2021, and that could help us. But right now, the 19 only provided us with this pullback. I'm just joking. Okay, but okay, good. Any doubts about this one? I'm just trying to put things as clear as possible. Okay, so if I don't express myself correctly, just let me know. If my answers are a little bit ambiguous, I don't think they are, please ask. Okay, so that's CAS. This is one second, just remember about this one. Oh, great. Because this one, okay, this is one trade that I'm in, and I just want to thought about metals and rallying great based on the weekly area demand after breaking, and this is also related. So I took that area of demand over there in the weekly, and it's rallying. That's great. I just thought about this because of the metals. So, one sec. And then I guess the gold, Barrick Gold, should be rallying strongly. Yeah, doing the same thing. It fell short of retracement to this weekly area demand. So the goal and all that is rallying. There's also room for price to keep on rallying on this. This is the second biggest gold mining company in the world. Yeah, great for all gold mining companies. That's great. So let's take a look at the next one. We already looked at the one of Fresnillo. So Fresnillo, that's a Spanish word. It's a tree, the name of a tree. So this one, Anwar, you were the one that asked before about why should I look at the bigger time frame? Do I need to look at the bigger time frames? Anyone can tell him why it would help? Kushbo or Peter? In this case, would it help looking at the bigger time frames? Or the very big time frames? Oops, pum, 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 pum. New York is closed. Why does it help? Because, okay, if you look at this one, Anwar, what do we have here? What is this? Okay. Anwar, what is this? Demand. 12 months. Origin of the move. And where is price reacting to? Look at that. 12 months area of demand. So if you are trading the weekly, daily sequences, monthly sequences, what do you think is going to happen to your shorts? Khushbu, Anwar, anyone? What do you think is going to happen? If in a 12 months uptrend, in this case, we're going to say uptrend, but it's just what we have. We just have like 10 candles, okay, 10 years. So bullish bias, the price action on the 12 months and imbalance on the 12 month supply is eliminated. So what do you think is going to happen to time frames smaller than the 12 months and all that? They're going probably to be eliminated as well. Yeah, Andrea lets you know if you are going to go long or short into a larger time frame supply and demand. Yes, so if you are aware that a very, very big time frame imbalance is in control, do not try to go against it. As simple as that. Do not try. So use it to your advantage. So what you should be doing is go long and years of demand and no shorts. Probably on the way down with this pause over there, there will be a peak probably in 3 months in the monthly supply zones as well and all that, but not good enough. Okay, and that's what we have. See, nothing. This is not good. Okay, so we also have this. We've got 6 months area of demand in control. We can go long at monthly demand zones. 12 months areas of demand in control. We can go long at 3 months areas of demand. Okay, so here, look at the price action on the monthly. What can you tell me about this bearish price action? Anyone? Is it good for shorts or is it good for longs? Good for longs. Frederick said nothing, but if you analyze price action, candlestick price action, okay, price one by one, look at this. We've got this bearish engulfing pattern, and now we've got the pink candle that led the this is touching, kissing the 3 months, 6 months and 12 months areas of demand, and then running, and now we've got 1, 2 ERCs. We just had 1 ERC, 1 ERC, 1 ERC, and then we've got 2. I don't think it's going to have 3 because we just have a few hours left. Well, it just closed, the monthly candle closed, okay, and it became an ERC. This is not an ERC, a basic candle. Well, it's not a failed ERC, but it looks like a 50% candle. But with the new indicator, probably it's the dot is eliminated, but this is a 50% candle. So the bearish trend line is being broken. We've got a peak there, another peak there. So monthly demand has been created. Okay. So do you want to go short with monthly area of demand, brand new area of demand created? Bad price action on the monthly and 12 months, 6 months area of demand in control? I don't. So you would say, okay, short in confirmation. Why are you going to wait for confirmation? What? Why? How come? Why are you going to wait? There's nothing to go short at. You've got bigger picture. So what you should be doing is waiting for the retracement to areas of demand to go long at. That's it. Confirmation for what? To trade against 2 giant trucks loaded with 2,000 tons of stuff against your little motorbike? No. I don't want to drive into a big truck with a small bike. I want to drive the fucking car, the fucking truck. Sorry for the word. I want to be the driver of the truck and stamp over all the motorbikes and cars in front of me. If I am a suicidal, if I get a suicidal mind, okay, I do want to drive that truck. I don't want to drive a small motorbike. So these areas potentially, probably that's an area of supply on the weekly. No, it is not. Supply is here. Why is supply there? Trend line break, demand. This is supply. Test it. You stop. Demand created. And there you've got the uptrend on the weekly. So you've got a weekly uptrend. Why do you want to go short, my friend? Why do you want to wait for confirmation? Confirmation of what? Of what? Can you tell me? What do you want to confirm? That you want to trade against a big truck loaded with motor parts from this company, for what? From the other company, from CAS, or from this one, Workforce. Okay? No, I don't want that. Thank you, Damien. Glad that you liked the webinar. So that's what's happening. We've got a weekly area of demand created over there, 2 ERCs. Okay, look at that, single candlestick at the base. Kiss the level. Okay, 2 ERCs like that. Then you've got monthly area of demand. That's the anti-time frame for the 6 months time, sequence. The weekly is for the 3 months. We've got a bullishing of the pattern confirmed already. Okay, no consolidation away on the latest impulse. Very bad price action on the week. Come on, this is long-term, long bias. This is a trade to hold until price until 1400, more or less. Yeah, Kushbo, confirmation of loss. Just kidding, but that's it. Confirmation of loss. It's not confirming anything. It's confirming that maybe that you might be silly enough to do it. Okay. Thank you, Omar. So this is, I mean, you can, once you start adding complex scenarios like consolidation and waiting for confirmation down there, up there, you're waiting for confirmation there. Silly you, my friend. Sorry for the word, okay? Silly you. I mean, are you crazy? Confirmation of what? Like Kushbo said, confirmation of being a loser, of losing on a consistent manner. You choose a sequence, and if you see that a bigger time frame sequence imbalance has gained control, forget about it. Forget about it. This is not, I mean, now let's do this. Let's compare this monthly price action with AAL. You could say, okay, this, I would be willing to risk some money over there because we've got a great imbalance. I look at the weekly. But now let's look at Fresnillo. Do we have that picture? No, we don't have any monthly area supply with 2 ERCs and all that. But we do have that on AAL, American Airlines. So you could say, okay, I'm going to risk. Okay, I'm going to take the risk over there. Okay, but obviously I'm not going to take any risks over here. Make sense? Good, great. So that's a valid area of demand. Okay, I'm not trading these stocks because this is the UK market. I'm trading mainly EU American stocks and some German stocks and all that. But that's it. That's what I'm doing. But this one I'm not. And this, I guess, this stands for £700. That should be very, very expensive. So I'm not trading this. So let's take a look at the next one. What about this one, my friends? Glencore. This is a company to do that. Okay, metal, minerals, and all that. Good, great. So what would you do on this one? I know what I would. What would you do? Go long, go short, and why? Okay, Anwar. So we've got, wasn't this one supply, all-time lows broken, consolidation away? So that supply has been eliminated. So we've got demand in control. So again, 6 months area of demand in control. That's what we have. Here we've got a monthly downtrend. This is not demand. This is good for the trend analysis. Okay, this is supply and was eliminated by what? This demand, isn't it? You follow me? This is a chain analysis. So this is demand. That was a valid trade on the way up and all that. And then the trend line broke and all that, and it drops. So this is not demand. This is not demand. Okay? It's not. This rally accomplished nothing because it paused there, and this is the one that accomplished the elimination of that area of supply. At the origin of the move, at the bottom, yes, that we would draw. at the bottom. Okay, so this over here is not supply as per the rules, because these didn't accomplish anything. This is just an impulse. Remember, supply was there, demand was here. This is I wanna be demand, but I didn't make it. But this can be used as confluence. When price reaches that area, obviously do not go long. Wait. If you want to go short, wait for new areas of supply, because this is quite strong. This has nothing to do with the bad price action we saw on Fresnillo monthly time frame. This is much better price action. Okay? So on this one, then we've got on the 3 months, the supply was at the top, demand was here, so supply is here, and it is in control. So we've got another bearish impulse over there, a dropped, or you can move down there. So on the weekly, we've got a weekly area of supply right there at the top. Okay? Right there at the top. So there's a lot of room for price to keep on riding. So this is when you have to ask yourself, what do I do on this one? What would you do? You've got 6 months area of demand in control. So going long is a good idea if you get new strong imbalances on the way up. That is one over there on the daily, but price did not retrace to that area. So it could continue rallying, create another area of demand. So if anything, long on the way up to this confluence, to this weekly area of supply, where we might start thinking of going short, but with this 6 months area of supply, I'm only long bias on this one. I wouldn't go short on this one. No way. Make sense? All good? Any questions about this one? But if I was trading this market, I mean the LSE exchange, the UK exchange, I would not be trading this one. I mean, there would be better stocks to trade than this one with that bad price action. I wouldn't be touching this one myself, not at all. Okay. So next one, that one is the one that Cushbo recommended, isn't it? Yeah. Look at the price action on this one. Crazy stuff. Okay, good. What would you do on this one, Cushbo, or anyone? What is your bias here? What would you do? And when and why? Long. Why? Long now? Or where? So let me start drawing things out there. We've got an area of demand that was tested. That would have been a nice trade. Look at the imbalance. Was tested. Bigger penetration expected. Eliminated. So we've got a confirmed 6 months area of supply, and we've got a 6 months downtrend. We've got a 12 months downtrend. We've got a 3 months downtrend. So demand eliminated, tested twice. Then since the June candle has closed, we've got a 3 months area of supply confirmed, because this candle over here is the consolidation away needed for the supply, the bearish impulse that accomplished the elimination of this used up area demand. Okay, so we've got 3 months downtrend, we've got 6 months downtrend, we've got 12 months downtrend, monthly downtrend, everything's down. So short bias. But now, no, it is not possible. Why? Because we've got, first of all, it doesn't really matter if we've got a downtrend or an uptrend, okay? What we do need to pay attention to is this. And what is price action telling you? What am I gonna say right now? Origin of the move, exactly. Overextension. So after 1, 2, 3 ESC candles, we wait for the origin of the move. Moreover, isn't there a lesson that talks about this? How is that lesson called? Can anyone tell me about it? Lights, exactly. The engulfing lights. After a very strong move we get an engulfing pattern, and this signals the end of the move. Will the move end here? No idea, my friend, but this is what usually happens. So now it is up to you to decide if you are going to trade assuming that this is going to happen, or you are going to be expecting price to rally over there, and from there go short. So now it is up to you. If you're going to buy all the way up, then you have to have some kind of support on the left, something to support your long, isn't it, Kushbo? Something. I mean, you need something. Okay, so do we have that something apart from the bearish impulse and the bullish engulfing pattern? What do we have? First of all, we have all-time lows. This should be demand. Secondly, we have 3 months area of demand as well. 6 months. Then at the origin of the move, we've got 3 months demand zone. This is the origin of the moves. Okay. On the monthly, what do we have? The monthly demand is much lower. So we've got the support of this time frame at least. So that's telling me, hey, yes, it's okay to go long, but where would you go long? Would you go long where? Would you go long here? Or would you go long there? Number one, number two, and why? Anyone? Bottom, right? Adam, okay, great, that's it. At the bottom, if anything, at the origin of the move. Because, I mean, I don't know what there is on the left, but seeing price action on the 3 months, 6 months, or 12 months, this bearish impulse might have eliminated something on the left. And if that happened, then this must be supply that was eliminated and there is demand over there. So I'm just going to go, when I look left, very far away from there. No, something more to the left. Correct, look at this. There it is. So we've got pick. Okay, we've got, this is the origin. We go left, right, sorry. It was eliminated right where? This pause, no consolidation away. This is supply, this is demand. So if I were interested in going long, I would definitely be thinking of going long there and not here. Now we've got a bearish engulfing pattern, price could drop even lower. Maybe it will not, and will stay here and then give us a daily wow long, strong one, and then we can try and go long from there. But if that doesn't happen, longs at the origin of the move. I mean, of all these stocks and formations that we saw for 1 hour, 20 minutes, to me, it looks like this one is the poorest one. This is the one I would never touch. Okay? I wouldn't touch this one. I would prefer to go long on the other ones, like on Fresnillo and CAS and all those. Okay? So any other suggestion? Okay, Andre is asking for EUE. This one. Okay, good. So this one, I'm going to zoom out a little bit. So on this one, what is your question? Or what will you do here? Anyone? Let me squeeze a little bit the charts. Great. So that's clear what I should be doing. Now I know. What will you do? What happened? First of all, Andre, you suggested this one. What happened here? Wait for a bigger retracement. Where? So let me tell you what I see here. So this is all-time high, isn't it, Andre? All-time high, all-time high. broken by an impulse that did consolidate away, isn't it? So we've got 12 months area of demand in control. So wasn't this one all-time highs, and wasn't it broken up there, Andre? See? So origin on the move. So we've got 6 months area of demand in control, 12 months area of demand in control. Look at the 3 months chart. All the time highs broken, 1, 2, 3 ERC candles. What do rules say? Origin on the move. Okay? And there you've got it, my friend. Origin of the move. Again. I mean, how many times do you have to see it to believe that once there is a strong rally, we wait for the origin of the move? It tried to here, but then it did. Look at the keys. I love kisses. So origin of the move. So we have to wait for new areas of demand in order to go long. So that's what we have to do. So what do we have here on the daily? By looking at this strong drop, don't you think that this super strong until here must possibly almost 100% eliminated, must have eliminated something here on the left? Do you think so? I mean, we're going to look at it now, but do you? But this is like it dropped from 3,040 to about 2,600. That's 400 points. That's a lot of money. 400 pounds. So now let's zoom out. Okay, so if you take a look at here, we've got a bearish trend line broken. This should be demand, and if this is demand, come on, my friend, then this impulse here, shouldn't this impulse here be supply? Andre and Kushbo, this is the chain analysis. So this one has been eliminated. Where did the elimination started? Isn't this demand, my friends? That's how it works. You've got that super strong area of demand with several ERCs. The gaps, I mean, the gaps could be used if there were no gaps anywhere, but there are gaps everywhere. So you just cannot use as a confluence because, or as an answer, like something that enhances or makes your imbalance more powerful. But it is true that you don't see several ERCs in a row for many days, except there, large ones. So this is the area of demand, and this is a valid trade. Why? Because we've got 12 months demand in control, 6 months, 3 months, also the monthly, I didn't draw it, probably the weekly here on the left, and that's the interchange zone after eliminating daily area supply. That was right there. There is room for price to reach that area of supply, but look at the price action on the weekly, on the monthly. You just cannot go short up there. You have to wait. I'm going short with, one sec, with 1, 2, 3, 4 bigger time frame areas of demand in control. Do you think that going set of focus short there is a good idea? Tell me what comes from, I mean, from your heart right now. Logic. No way. Just put everything on a balance. On the left side, you've got the bias for longs, for buying, and here for selling. So for buying, we've got 1, 2, 3, 4 points. Okay, let's say 1, 2, 3, and 4 points. We've got 1, 2, 3, 4 points. That's the left balance, 4. And on the right side for short, what do we have? 1, which is as big as one of these ones. So 1, and then we've got the supply on the weekly, which is 2, but it is not as big as the other. So we really have 1 or 2 points maximum against 4. Which one wins? 4. Buy. So even though we've got a strong area supply there, forget about it. It would be great to go to think of longs over there, but it just retraced to that daily area of demand. That is really great. Price could have done that. Okay. but it didn't. So this is this one, which is also, well, this is a mutual fund, okay, which is great. All good with this one, Andre? You are the one who suggested this sticker. So that's how this works. So you have to sort of have a balance on the left side, the longs, on the right side, the shorts. So you start adding weight to the balance. So which one wins? Longs or shorts? And if the longs win, forget about shorts, my friend. If price reaches up there, okay, I think price is going to drop until, imagine there is now a big ERC candle over there. Imagine next week or next 2 weeks, we've got an ERC candle on the weekly. Do you think this is going to hold? And then you could say, okay, I don't think it's going to hold. I'm going to wait for confirmation. Confirmation of loss, as Kushpo said before. So I'm not interested in that. So more and more, I mean, I have evolved as a trader, okay? I have evolved as a trader. So in the past, I would be waiting for confirmation there. Right now, I'm not. Because I'm learning more and more to hold my trades over a long period of time. I see these price action not holding when the bigger time frames are in control. And I just learned my lessons. So it takes time. You will not learn it by listening to me. It might trigger something in your brain that could make you think about it. Okay? But thinking is one thing, acting upon those thoughts is a very, very different thing. Okay? So let's take a look. I guess John Good Group is maybe a cousin of Robin Hood. John Good. Let's see. John Good. This one, I guess it is. Oh my God. What would you do in this one? Crazy. Long. Why? Anwar? Lowest low, yeah, all-time lows. So look at this. We've got an area of demand that would have been a great trade a few years ago. Why? This is like the one we saw before. Okay, not this one. No, come on. Glen, no, Fresnillo. Yeah, see, Fresnillo, origin of the move. Okay, and then we've got this one, origin of the move, started, retraced, and then rallied. The arrival is scary. I mean, it is faster than the, so you will have to wait for confirmation. So rallied, and now it's been tested, bigger penetration expected, elimination of the zone has happened. Okay, so after, look at this. Look at these bearish impulse. So after such a strong sell-off, going short, not allowed. So short right now, we need a bigger retracement. So shorts are out of the way. Now, the question remains is, are you going to go long, or you prefer to look for a stock that is bullish, creating new areas of demand and respecting them? So which scenario would you prefer to trade? Would you prefer to trade this scenario for longs or this scenario for longs? This is scenario 1, this is scenario 2. Which one would you prefer? 1,000 times. Scenario number 1. So for me, this one, I'm not touching it. Even though I am almost convinced that price is going to rally at least to that interchange zone. Convinced. But conviction will not make money for me. So another idea would be, this is the last resort for shorts. Single ERC, much wider than the average, shorts up there. That would be the way to go right now. Look at the daily. You've got rallies on the daily that are not strong enough. And then we've got 1, 2, 3, 4 ERC candles. So going long right now, no way. So this one is just a no for longs. For me, I wouldn't trade this one longs, but I would trade longs, the one like AAL and many others, because they support of a bigger time frame, which is holding. It's giving us bigger time frame areas of demand. It's giving us engulfing patterns and all that. So this one I would prefer, or I would prefer like this one over here. We've got this one. We've got demand on 12 months, 6 months over there, bullish impulse, blah, blah, blah. So demand on the weekly, on the monthly. So I prefer that one rather than, I would prefer, obviously, than this one. Okay, so we've got time for another one. Okay, so which one should I analyze? If you can think of or give me an example of a more trending market, like, hey, because these are super complex scenarios and these are going to probably be the cause of your pain, I mean, of losses. I can choose many, Anwar, but I don't want to be biased. I don't want you to think that I am biased. You just tell me which one, and that's why I'm asking you. Okay, copy set one, which is IB stock. This one. That one is looking better. Still tricky, but this one at least has got 3 months area of demand control, which is great. Okay, and we've got monthly supply at the top. We've got another weekly area supply at the top, and this goes without saying. I mean, 1, 2, 3, 4. What are we expecting, my friends? Origin of the move. What do you mean, Damien? How do we make it the transition to another asset class? What do you mean exactly? I don't understand your question. So in this scenario, you've got 3 months area of demand control. So going long is the way to go. After a very strong bearish impulse. So at least you've got, missed this one, 6 months area of demand control, 3 months area of demand control. Let's take a look at the monthly, the origin of the move alone. So we've got support of 2 big time frames. But I just don't understand the question. How do you make the transition from Forex or to stocks or vice versa? What do you mean exactly? I'm not understanding your question. Transition of what? To trade from one to another one? It will depend on your broker. I don't understand your question. Sorry, Damien. Confirmation, Kuchbo, you wait in the anti time frame, the lowest time frame. You can also wait for confirmation on the bigger time frame, the middle time frame. So the bigger the time frame you wait for confirmation, the more time you're going to have to wait. But also the more odds, the higher the odds, because it's not the same waiting for a 4-hour area of demand as confirmation than for a weekly area of demand. The weekly area of demand is stronger than the 4 hours. So the bigger the time frame, the more reliability for the trade. Currently, you trade Forex, but you would like to add stocks, options. Well, I would recommend you to use a broker like Interactive Brokers that has everything, has Forex, has stocks, it has ETFs, it has CFDs of stocks, which have a higher leverage than the stocks. The stocks have a 2-to-1 leverage. That is, that if you have $10,000, you can trade up to $20,000. Okay, you've got a loan of twice the capital in your account. For ETFs, for CFDs, you usually have 30 to 40, 50 sometimes, 30 usually, or 10-to-1 some of them instead of 2-to-1. And then options, you have to learn a completely different monster. I mean, it's a completely different thing. So I would start with stocks, using brokers like CMC Markets, like IG, like Interactive Brokers that allows you to buy odd lots, I mean less than 100 shares, and that's what I would do. Okay. And so we need to wait for formation of demand zone in the weekly and daily to go along at this one. Yeah, it already happened. It already happened, I believe, on the daily. So price continued to drop, demand was here, trend line break. If that was demand, then this should be supply. Supply eliminated, demand created. Make sense, Anwar? That's how it works. The chain analysis. I mean, zoom out a little bit. I don't need to, I mean, when I zoom out, I see this price action here on the left. I know that there is a low, low, lower, low. I know there is a trend line. I don't need to draw the trend line. I know there is demand somewhere over there. So I just did this with my crosshair. I can do this with the line. So if price dropped down there, it eliminated demand over there. So that should be supply, tested, used up, eliminated, demand. Okay? That's how it works. So demand already happened. So you need to wait for new demand in order to go long. So will that happen? I don't know. But maybe here, if the trend line breaks, it will create another impulse similar to this one. Then the retracement, go long, and all that. That's how it works. That's a long story. Maybe that will be a lesson on that, on the structure, non-emotional versus emotional rallies, and that's a long story, and it's already almost the end of the webinar. So I just wanted to show you something, okay, because I've been working on this. Okay, one sec, I'm going to show you. Okay, good. One sec, it's not. So I'm going to show you what it's looking like, the new course, okay? So this is what I have right now, okay? It's going to be better than that, okay? So this is how this is going to be structured. So we're going to have a basic course, intermediate course, and then I'm going to be adding in the future more courses, price action courses, probably the option course, the market puts, the spreads, and all that. But it's going to take time because I'm just building all this, okay? So this is what we're going to have. We're going to have the introduction, elementary notions, supply and demand basics. This is much better structure. And here on the right side, you're going to have the number of categories within this course over there, okay? So for example, let's go to elementary notions. We go here, and then you've got leverage and margin, probabilities in trading, finding your edge, macroeconomics, earnings, liquidity, price action is almost everything. When you go here to scoring the amounts, this is a brand new, I mean, this is all brand new, okay? Brand new lessons and all that. So we're gonna use the qualifiers, accomplishment, consolidation away, the impulse, the reward risk, the strength of the impulse, the basic structure, scoring the trend, scoring location, how to put together everything, okay? You're gonna see that. So it's much, I mean, it has nothing to do with what we have right now, okay? Nothing to do with this, because this is always much better, and there will be lots of things where we can do, okay? So I have already finished this course, but it won't be available until maybe in a few weeks, but I've got some of you taking a look at it and giving me some kind of feedback, corrections, and all that. And then I am already working on this one, okay, on the more intermediate, which is the introduction. Obviously there will be introduction for each one, the price action, time frame, personalities, fail ERC, interchange zone, expecting moves and unsustainable moves, the engulfing lights, imbalances wider than the average. So when we go here, okay, it's explained much better, okay? As you will see, okay? Much better. All the charts are new, nothing from MetaTrader, no indicators used until the indicator is discussed, which is the only one that we are using, which is the 20 EMA. So we have the confluences, the power of nested imbalances, trend line confluence, and then 20 EMA confluence. And then on 20 EMA confluence, then we're going to start. This is the first chart you're going to see with an indicator in many lessons in the basic course. There is not a single chart with an indicator. This is the only one, and this is optional. Okay, and then it's going to explain everything step by step. Okay, clean charts, as I always do lately for years already. Okay, explaining every single thing, the confluences, why, what we have to do, what we have to look for, what not to look for, and all that. Okay, I just wanted to show you all this. videos, little, maybe few videos, okay? Because the videos are a little bit more difficult to make. Well, they are easy to make, okay? But it's way better to, with the images, you don't have to go back and forth in videos. I will be adding videos, but if I have to record a video for every single lesson, then you're not gonna see this course release until maybe next year. You know what I mean, Anwar? So this is going to be like a thing. I will be working on it every week, every month. I will be adding videos and more things. But right now, I just cannot record a video for everything. Otherwise, I will not end. Never, ever. So I have to end these two courses, have to migrate all the information from the other software to this one, make it work, confirm that it works. I mean, it's very, very very hard. Lots of things. Okay, I just wanted to show you how this works. I'm going to show you something that I did here for the imbalances, scoring the imbalances, Bayesian structure, putting everything together. Access to comment right now, it's not possible, but I can give you some, send you by email, Whoopi. So here, for example, when putting together everything, you're going to see here that we are going to be, this is the scoring table where we're going to be scoring the imbalances, okay, strength impulse 0, 0, and then we've got the maximum is 5 plus 2. Why plus 2? Trend gives you a plus 1 more point and location as well. So this is obviously supply 2 goes against the trend. This is the weekly area of demanding control. So this 1, 2 supply is scores the trend against it. Location, it's not nested within a bigger time frame, but 1 is nested at the proximal line, so it gets a 1 in location and it gets a 1 in the trend. Why? Because the weekly is in an uptrend. So by having this kind of matrix, okay, you will be able to say, okay, I am interested in going long on this one, demand 1 and demand 3, but not sure that supply 2. Demand 1, why? Because it is nested at the proximal line of the weekly area demand. Demand 2, because it's very strong and it is a momentum type of trade, okay? And the trend line would be up and all that, and it is reacting to the weekly average demand in an uptrend, so we get a 5 in a structure, but it gets also a 1 in trend, okay? Make sense? So this is the kind of, I mean, I've been working hard on this, okay, putting everything together and all that, and it will be like the wireframe for you to have a more mechanical approach to the strategy, okay? Damien, contact me by email later, okay? Send an email to me to info@setandforget.com and I will answer your question, okay? So I'm trying to make things as clear as possible. This is like a small preview of what I'm doing, okay? Like too high, too low, too late, my friend. So here I am using the calculations, okay, to tell you when it is too high, when it is too low. As you can see, this is completely different to the previous course, okay? This is the Fibonacci being used to see these ranges in the range, okay? Too high, in the middle, too low, getting too low for longs. It's looking good, yeah, Andre, but it's still a few weeks left at this, okay? Multiple time frame analysis, time frame sequences, and then obviously here on planning a trade, we have the weighting, the order types, the risk of trading, risk management, planning a trade, choosing a broker, blah, blah, blah. And then you've got build your own trading plan, and also you on the realignment section, you are going to have examples. Obviously, this will define the realignment, and you're going to have the samples of all time frames in an uptrend, lower time frame out of alignment, middle, lower out of alignment, longs at the top time frame, then reverse. So when you go here, what you're going to see, okay, why you can go long, why not, and then you put everything together in 3 time frames and it tells you, okay, I can go long there and there, but not there, and all that, okay? So and then, okay, this is what I wanted to show you. I'm working on this, okay, still working, still a few weeks left but I'm working on it. It's a lot of hard work. And that's everything for today. Hopefully you are seeing the rules, you are putting all the pieces together in a better way. Okay, I'm trying to do my best to explain the rules as clearly as possible. And I'm trying also to not convince you, but to make you see that going against the trend, you have to have very powerful reasons to go against it. And if you got a bigger time framing control, you can hold the trade longer, forget about it, and let it breathe. Maybe in a few weeks you're going to have your reward if you are doing the long-term approach, obviously. And that's everything. Enjoy the rest of the night, and see you in the community. Okay, bye-bye. Good night.